months ago, when NIO stock was about $6.50 per share, I decided that it was too risky for me. And I made a video about this back then. Today, when the stock price is below 5 quite for some time now, and we got recent quarterly results, I decided that it was a great time to take a look at the stock again. While looking at October's presentation, I compared it to September's, and I noticed something that no one on Wall Street talks about. Now, I don't care if you're a NIO investor, want to be one, or you just randomly clicked on this video, you need to hear the next information. Better yet, after this video, go download the presentations and check it out for yourself. Hey there and welcome to the Market Monkeys channel. It's Julia here, and today we're breaking down NIO, a major player on Chinese EV market and the company that constantly attracting the attention of investors and analysts. Its latest earnings report is the mix of high and lows, with record-breaking deliveries, improved margins, ambitious projections, yet the stock price did not reflect such a positivity. So what's going on and what to do with NIO stock? And let's start with the good news. NIO delivered 61,855 vehicles in third quarter, setting a new record. That's an 11.6% increase year over year and a 7.8% rise quarter over quarter, showing strong demand. However, the company earlier this month reported slightly lower sales in October than in September, and this is while overall Chinese EV market reported growth on already pretty high demand for EV cars. So it means that for overall auto market and Chinese EV manufacturers, October was a pretty successful and a pretty nice month, and for NIO for some reason it wasn't. Let me show it to you real quick on their website. So here we can see that the company delivered 20,976 vehicles in October 2024. Pay attention to this number, and let's stop here for a second. We will come back and talk about October deliveries a bit later, but for now let's open their previous release, and here we can see that 21,881 vehicles were delivered in September 2024. Basically, you can say that it's not such a big deal, right? In October they delivered approximately 21,000 vehicles, and in September it was 21,180. But here we have another problem. The smaller deliveries came despite the fact that the company just launched their new Onvo brand or Onvo sub-brand, and the analysts and actually all of the people were expecting that this new company, that these new cars will drive the demand and will drive the sales of the company to the great extent. And if you think about this for a second, it makes sense, right? Because this Onvo brand, it's this family-oriented vehicles that are much cheaper than NIO, and they were supposed to sell much better, but it didn't happen. And by the way, in my previous video about NIO, I mentioned that back then, it was beginning of October, that it was a little too early to say if this new Onvo brand and these new Onvo vehicles will become a positive catalyst for the company or not. And now, as we see, it's still not clear. Let's jump back to October's deliveries, and now will be the most crucial information that I found when I compared these two quarterly results. By the way, if you find this information valuable, if you find this information helpful, if you find this information interesting, don't forget to press a like button and subscribe to our channel. It really helps our channel to grow. So, these approximately 21,000 vehicles that were delivered in October consisted, pay attention, of 16,657 vehicles from the company's premium smart electric vehicle brand NIO and 4,319 vehicles from the company's family-oriented smart electric vehicles sub-brand Onvo. And this is while in the previous release we saw that the deliveries consisted of 20,349 vehicles from the company premium brand NIO and 832 vehicles from the company's family-oriented brand Onvo. I will even put these two paragraphs close to each other so you can see exactly what I'm talking about. This is very important point that we need to pay attention to. Is it a coincidence or is Onvo cannibalizing NIO's sales? In general, often when you want to evaluate the feasibility of an investment or a feasibility of a new product that you want to create, you need to take into account that there is a possibility that this new product will take some market share from your previous product or from your another product. So basically we already see that it's happening here, though it's still a little early to make a certain conclusions. In the upcoming reports, we need to see which vehicle, NIO or Onvo, brings better margins and brings more profits. So basically it is possible that this cannibalization could be actually a good thing for the company, but again, it's still a little early to understand whether it is or not. But I must mention another point. Usually when you make cheaper product, this product has lower gross margins. And because of that, you need to make a decision. You want to move margin way or volume way. Margin way means that you sell smaller amounts of pretty expensive items and you make a nice profit from each of these items. And volume way means that you are basically becoming a Walmart. You have razor slim margins, but you must sell in crazy huge volumes. But the problem here is that NIO sales aren't that big, aren't that huge, but their gross margins are growing. So we need to make sure that we will not come to a position where they will have bigger gross margins for Onvo brand, for example, but it will be pretty cheap product that is not selling enough pieces to cover overall expenses of the company. It's also a possibility. By the way, even in my previous videos, we actually were expecting that Onvo will be selling kind of more than they did, because as I mentioned back then, they sold approximately 800 cars only in 3 days in September when the sales of Onvo just opened. So they were off to a great start, but it seems that they kind of lost this fast selling pace on the way. Total revenue dropped 2.1% year over year, coming in at 18.67 billion yuan or approximately $2.66 billion, missing analyst expectations by approximately $70 million, which is a lot. While NIO managed to improve its gross margins to 10.7%, up from 8% last year, and vehicle margins climbed to 13.1%, these improvements couldn't fix a wider net loss of 5.14 billion yuan or approximately $721 million. Another important point to pay attention to is pricing wars in China. China's EV market is in the middle of this brutal pricing wars when major players and in general all of the players are slashing their prices to capture market share, and NIO is of course one of them. Basically, they do not have any choice. I'm sure that NIO's management would prefer not to cut any prices, to sell for lots of money and to become profitable, but when their rivals are cutting the prices, of course people will choose to buy that items and not products of NIO. As we already mentioned before, to stay competitive, NIO even introduced this new cheap brand Onvo, but this shift is negatively affecting their average selling prices. By the way, another not so great piece of news for NIO investors is the fact that NIO's main competitors Xpeng and Li Auto posted higher gross margins than NIO did. For example, Xpeng posted gross margins of approximately 15.3% and Li Auto posted gross margins of 21.5%. This is crazy. Elon Musk doesn't see such high gross margins for Tesla even in his wet dreams. So I am really curious to see this breakdown of gross margins between NIO and Onvo, and is the trade-off worth it? Lower prices are supposed to drive higher sales volumes, which we did not see just yet. Plus, NIO's revenue dip suggests that profitability is not on the table yet, at least in the short term. But of course, it's not all of the bad news for NIO, and there were some positivity in this third quarter report. For example, gross profit surged 31.8% year over year, reaching $286 million. This reflects improved operational efficiency and lower material costs. But the important point here that gross profit doesn't account other NIO's expenses, for example, marketing and R&D. So it's basically one small nice piece of a puzzle on the way to profitability. Another great point that could actually be a positive catalyst for the company that I found in their presentation is what NIO's chief financial officer said, and it was that ongoing cost optimizations helped NIO increase the vehicle gross margin to 13.1% in the third quarter of 2024. With continued expansion in sales volume and steady improvements in gross margin, our free cash flow turned positive this quarter. This is actually an amazing hint toward financial stability, and of course it can be a perfect catalyst for investors of NIO stock. He added that starting next year, their three brands are poised to embark on a robust product cycle projected to elevate the company's sales volumes to new heights. They expect this momentum will drive continued improvements in the company's operational and financial performance. Amen. I hope for all of the NIO's investors that it will happen exactly as he says it will. Now a few words about guidance, because it's also important information. Looking ahead, NIO is optimistic. The company projected fourth quarter deliveries between 72 and 75,000 vehicles, a year-over-year increase of 44 to 50%, which is crazy. It's amazing numbers, and I really hope that we will see these numbers in the upcoming quarter. Revenue is expected to be between $2.8 billion and $2.9 billion, reflecting 15 to 19% growth. But even with these ambitious goals, analysts were disappointed. Citing the guidance as below expectations, I remind you that the consensus estimate were at $3.18 billion. There are few major risks that we actually already talked about, so I will stop here just for a moment, and right after this we will talk about what to do with the stock of the company. So the first risk that we already mentioned is intense competition, and we already talked about this pricing wars, so I don't see a point to talk more about this. Another risk is profitability pressure that we also mentioned before, and the last risk that I think worth mentioning is this economic and regulatory uncertainties. By the way, it's not only NIO's risk, it's overall Chinese market risk. In general, we see the Chinese economy is up for challenging times, and with the recent elections, with the Trump becoming new president of United States, and as we know that Trump is not a big fan of China, I am sure that he will try to make their lives harder than they are right now. With everything said before, Wall Street analysts do not see that NIO stock can go much further below the current stock price. The lowest expectations at about $4, average is about 6.7, and the high is about $12.5, although right now $12.5 in my opinion sounds a little too optimistic. I must say that these valuations make sense to me, and I consider right now NIO to be a possible investment for people who believe that China will see some better times from now on, and for people who are ready to take on some risks. Once again, I decided to skip for myself, but this time not because I think that stock price is unfair and that the stock should go down in price, but actually because of all of these Chinese uncertainties. In general, any stock valuation and any investment decisions are based on assumptions. No one really knows what will happen to this or that stock, because if he or she would know what will happen before, he or she would get very rich very fast. With this said, I want you to understand that in my opinion, in my assumption, China will have some more challenges in the future. In my assumption, these challenges will affect overall Chinese market and all of the companies on this market. I don't know what will happen in reality, and if you assume that China is on for a bright future, you will make your decisions based on this assumption. That's why it's so important to do your own due diligence. We are repeating this phrase over and over again like a broken record, not because we enjoy saying this, but because any piece of advice, any investment decision of analysts, of very successful investors are based on their assumptions. Assumption is not equal truth. Assumption is equal a theory or a guess. So I guess that there is a possibility that NIO's stock price will go back to $6.5. After all, they're taking on some challenges and they're overcoming them. They are developing, they are progressing. So if you believe that Chinese market is worth paying attention to, if you are ready to take on some risks, NIO could be worth taking a close look at. Recently, I already bought for myself some risky stocks, for example SoundHound, and I have a video about this. So right now I'm not ready to buy another risky stock, although if NIO would be not Chinese company, I would think about this seriously. Let me know in the comments what you think about this company. Don't forget to press a like button, subscribe to our channel, and I'll see you on our channel next time. Happy investing!